Good morning, welcome to this weekly markets update from AGM Markets. Today's the 24th of June 2014. What we'll do today is go through some technical analysis on Euro, Dollar, Cable, Dollar Swiss, Aussie and Gold. Just to review what happened in the markets last week briefly and give an outlook for this week. I will not make any trade calls or recommendations in this video. Do trade at your own risk. If you could please read our full disclaimer, which is on our website at www.agmmarkets.com, that would be appreciated. And for any new followers out there, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, purple 100 and gold 200. Okay, let's briefly have a look at the Forex calendar. So today's Tuesday morning. What do we have yesterday in terms of high impact data? Overnight yesterday we had Chinese HSBC flash manufacturing PMI came in better than expected, with Eurozone French flash manufacturing PMI and the services both came out weaker, and then we had the German flash manufacturing and services both came in weaker than expected. Then the Eurozone both came in weaker than expected as well. And then to end off yesterday, we had the US existing home sales, which came in better than expected. So quite a lot of weak Eurozone data yesterday. Today, we have already had at 9 AM, we had the German IFO business climate that came in weaker than expected. And then in terms of mid-impact stuff, we've had some UK data. In terms of the rest of the week, in terms of high impact stuff, today we've got US CB consumer confidence and new home sales at 3 PM. Tomorrow we've got the durable goods numbers. Thursday we have Bank of England Governor Carney speaking again at 10:30 with the weekly jobless claims at 1:30. For any of you trade the key, we got the New Zealand trade balance, and then on Friday we have German preliminary CPI and UK current accounts. So quite a standard week in terms of data. Nothing major. I mean, there's no sort of FOMC or rate decisions or NFP, anything like that. It's a pretty standard week in terms of that. Not too much out. So. But it doesn't mean that there won't be any big moves in the markets. There's already some interesting things going on. In terms of last week, I've left a lot of these charts are actually the same. I've left the same levels on from last week because not a lot has changed. Last week's candle, it's not exactly a massive reversal candle, but and there wasn't massive range. But you can see we had a 50. We were speaking about these 135, 33s key support. We had 3 weekly candles coming off of this level, and in terms of the fibs, we spoke about in terms of looking for selling opportunities. This fib here, so this is from the high of 2014 to this recent swing low in June. The 50% coincides with the 137.50s. So keep an eye on that. And of course, in terms of the fib of the other side, it's this one here that actually comes off of a 38.2 fib. I'll just quickly draw it up. Just for a reminder. So it's there, that's where we're coming off, that's where we're sitting up currently. So that's the fib from the low of 2013 to the high of 2014. So they're the 2 fibs really, and there's nothing much else in terms of different setups. You've got the 2 fibs there, and they're the 2 key levels to look at in my opinion. I mean, in terms of, if you're sort of intraday trading, then you can always draw the sort of the 50 pip increments. But in terms of key setups, key levels going into the week, these are definitely the 2 big ones. So you've got a lovely support level and an interesting resistance level if we do get there, of course. But in terms of the weekly bias, I mean, I'd say the bias this week is still a slightly retracement mode, I think, because we've had a lovely bit of support. I wouldn't be surprised to see a brief bounce up, and then perhaps we could get an interesting reversal signal at the 137.50s if we do get there. Or of course, there's nothing stopping it to keep on breaking high and keep on ripping to the upside. But interestingly, the data that we've already had, well, I just spoke about on the calendar, has been quite heavy. But the euro's still holding up, so that's an interesting sign. I would not be surprised to see some short squeeze in action here, and that, I think that's even more emphasis towards the upside in terms of a retracement this week. I mean, we've already had some weak data this morning, but the euro is not having any of it, and it's grinding higher. If you can see it on the 15-minute chart, you can see. So we had the weaker IFO came out, we had a brief spike lower, but buyers came back in and it's just grinding higher and taking out all of those, the sort of shorts of stocks above here, for example. Okay, let's move to cable. What's going on cable? I've left this up from last week as well. So this is the weekly. And the key level that we were speaking about was the 167's key resistance. Interestingly though, we did get a weekly close above the 167, so this sort of that time, I should take this fib off for a second. This 170 could act as support this week. You can pretty much see we're testing it as we speak now. We're just above it actually. But yeah, keep an eye on that. And we do have this 168.50s, and the reason being is because of this fib here. It sort of coincides with that. And the reason we're looking at that fib, because remember, actually I'm going to zoom back in. These fibs have been playing out nicely all year. So this is the first one here, remember, off of the 61.8, lovely uptrend, retracement down to 61.8, so we rotated higher. And then you got the next one here, so just extending the low from where we bounced off there, taking that high. And then we've had a lovely bounce off that 50%, and that fib is now complete in my opinion. So then that is where we've got this one here, so just taking the low. So it's just pure dip buying really. And you can see it you can see it quite clear on the weekly as well. That was the first one, that was the second one, and this is the third one. And that's why we've got that 168.50s on there. You can see it sort of coincides in between this 50% and 61.8% retracement range as well. But in terms of this week, yeah, I mean, well, in terms of these next couple of days, this 170 is definitely sort of key bull bear line really. If it's going to hold above, then it's probably going to be off this level. But if we're going to see some sort of sell-off this week or sort of retracement towards the downside, then it definitely needs to close below that, and then this fib should come into play. Dollar Swiss on the weekly. What is going on? What we've been speaking about, we've sort of been speaking about this lovely level here, the 0.87. That's where we got the bounce off, and then we had a sort of grinding high towards this 50-week moving average. It hasn't actually tested it, but you can see it's maybe people are sort of front running it, and it is where you can see it is currently holding below this. In terms of if you think it's going to keep them grinding higher than the fib to look at, I've just flipped it to the daily. This is the one here, I think. And the 50% comes at 0.8869, it's just called 0.8870s. In terms of, there's nothing major interest in terms of fibs towards the other side. I mean, in terms of this weekly chart, we're a long way away from it, but that'll be the fib, the next one to look out for, I think. I mean, you can take these smaller ones here, for example, but I think that's a much clearer one. That's the high of 2013 to the low of 2014. In terms of the shorter term chart, it's been the 4 hour. It is quite choppy. You can see it has been chopping around for quite a while. It's still just, personally, just that's the same from the daily. That's how I'd look at the 4 hour as well. I mean, in terms of key sort of support and resistance areas, you got the 0.89. That's the sort of key line in the sand for the week, and the 0.8950s as well. But yeah, it has just been quite choppy really. These last sort of couple of weeks, but you can see it does look like it wants to keep on retracing towards the downside now. It's been hovering around, buyers have been trying to prop it up but sort of failing, and yeah, it just looks like it wants to come down to a healthier sort of retracement level, and that's why I think this fib could be quite interesting if we do get there. And that's pretty much it in terms of dollar Swiss. Aussie on the week, I've left this up from last week as well because nothing has changed. I should get rid of this fib a second. I'll put it back on. It's still chopping in between this 200 pip range, the 0.92 and 0.94. In terms of this weekly, last week we had another test of this level and it closed below, and this week we've already had a test of it and we're currently below it as well. So sellers are still trying to cap this 0.9450s. In terms of fibs on this weekly, it's still this one to keep an eye out for. If we do get a heavy retracement over the next couple of weeks, then this is the 50% that comes at 0.9060. But in terms of this week, it's still about these two. I'm just going to flip it down towards the daily now. You can see we have had a couple of closes above, which has been interesting, but I suppose the other level to keep an eye out for, to perhaps include if you're looking at the shorter term time frames, is 0.9050s. We sort of got, it tested it there actually and got below. But we have had a couple of fake outs, so keep an eye on that. What was quite interesting last week, and that was the fib that I previously had on, was this one here. So we're looking at sort of the mid-range of this sort of 200 pip range, this lovely uptrend. we had retracement down and a lovely bounce off the 50% retracement. I'll just flip it down to the 4 hour and you can see it much clearer. So remember, it's the fib, the low of the chart to pretty much the high of the chart here. So we had a lovely uptrend, retracement down 50% pretty much to the pip and that 200 SMA, and then we had a lovely rotation towards the upside, and we pretty much took out the 0%. And interestingly, we have closed below. So do keep this in mind, because it could keep on retracing back down. We could get another test off of this big 50% level. So keep an eye out on that. But that's pretty much it in terms of Aussie. I'd say keep those pretty much 3 levels. I mean, you can draw the 0.93 as well, see what happens if we do get there this week. I mean, there isn't too much Aussie data out this week, but of course it does sort of follow everything else, and depends what the US dollar's doing, etc., etc. So yeah, that'll be, those are the fibs, those are the levels on Aussie. Gold, it's starting to break out towards the upside in terms of this weekly, with this sort of trend line resistance. You can see we pretty much got a weekly close above that. I mean, I suppose you could draw it from there. And it's, it's still pretty much, it's still above it currently. In terms of the shorter term time frames, so the daily, what have we been speaking about? The lovely 1240s is where we've come off of lovely support, and it's just rotated towards the upside. A fib that I think I spoke about last week, I've just flipped it to the 4 hour. Was this lovely move here? So really nice uptrend retracement, similar to Aussie. And we spiked below the 50%, lovely reversal candle there, and we've just flown towards the upside. So the next one, personally, to keep an eye out for would be, well, that one there. That's definitely the low, but you can see we tried to get some sort of retracement there, but that probably came off for 23.6, I'd have thought. And it's just breaking higher. So but anyway, that'll be the low, personally, to look out for. So that's currently the high, but of course it could keep on breaking higher and higher. But yeah, it definitely is in grind higher mode. In terms of fibs to the other side, so this is taking the high of the year to the low of the year. I've just flipped it to the weekly so you can see it clearer with the period separators there. Interestingly, last week, this fib here, we did have a weekly close below, but it is, I mean, that is a bullish candle, but interestingly it did close below, so don't be surprised to see it close below this week, but of course it can keep on ripping towards the upside. Interestingly, on the daily chart as well, the price action is quite interesting. We have 4 daily candles have pierced this 50% and closed below, but today is looking quite aggressive already for gold, so do keep an eye out on the daily candle. If we close above, then I think we'll just continue to sort of grind towards the upside. In terms of fibs on the weekly, then you're looking at the sort of the bigger moves here. Oops, what have I done there? Just redraw that. Yes, then you're sort of looking at the fib from the high of 2011 to the low of 2013. That would be the next move. You can see that's quite clear on the sort of the monthly as well. But we're a long way away from that. In terms of other sort of round numbers, you've got the 1300s to keep an eye out for. That was acting as an interesting bull bear line there. And then if we do get an extensive pop up, then keep an eye out on 1350s as well. And then in terms of just support resistance, you've got this high here in sort of April. You can see there, I'm just hovering the cursor over. We're quite near that at the minute, as that comes in at 1327s. And that's pretty much it in terms of gold. Yeah, that's it for this week. I hope you found this video useful. If there's any other pairs that you want me to have a look at next week, then feel free to comment under the YouTube video or send us a tweet to our Twitter feed, which is at AGM Markets. I hope you have a great rest of the week trading, and I'll catch you next week. Thanks for watching.